Welcome to Currency Watch. This is Chris Keane from a Keane point of view. The majors had a whipsaw day of trading today in North America as Ben Bernanke was on the Hill testifying to the Senate. In the beginning of the testimony, it appeared as though quantitative easing had been taken off the table. But after the question sessions began, it appears as though that quantitative easing is just one of the few things that the Fed could use to help the economy if continued slowing was seen in the future. This statement caused most of the markets to rally higher, and most of the majors finished near their highs or lows of the day, depending on the currency cross. I find this interesting because the Fed actually didn't really even say anything new. He just stated something that all the traders already knew. But I guess the wording is everything when we're talking about the Fed chairman. Let's take a look at the few pairs that are trading in interesting positions. As you can see, we'll take a look at the Euro USD first. The Euro USD broke down to test trendline support here, all the way down around 122. But as you can see, it's interesting because it has posted three higher lows over the last few days. And so it has been pushing higher, not in an aggressive fashion, but it has been pushing higher, and it's still actually in this broader trend, this below trend line resistance at 123.30, and support is after 122 is down at 121.50. If we get a break of either 123.30 resistance or support at 121.50, we could see if we go below 121.50, we could see an aggressive move down lower towards the 118.80 level. If we break back up above the 123, we could see a short reprieve, and I would say that we'd probably go through towards the 124.05 in the short term, and then maybe even up to the 125 area before we could find the momentum to move back down lower. Let's take a look at a pair that's in an interesting position tonight. It's the USD CAD. As you can see, the CAD closed at the lows of its days. Then it's also testing a major support level that has contained the pair over the last few weeks. This is the 50 fib, and it comes around at 101.232. Now, if the pair breaks below this 50 fib level, we could see a drift down towards basically the 0.618 fib from the May lows, which comes at 1.0050. I would wait right now. I'm not sure exactly on the direction would this be, and if we see a 4-hour close above or below this, it could give us a better indication of which way the pair may head in Asian trading. Let's take a look at the Great Britain pound, because tonight in early European trading, we have the release of the minutes for the Great Britain pound and the jobless claims report. The pound, as you can see, has been traveling higher on this trend line over the last few weeks, and with the Fed minutes came down and tested that trend line, but it moved up to close near the highs for the day. We can see there's significant resistance here at the 0.382 fib, which comes at 156.60, and daily price resistance, which comes at 156.75. This creates a strong resistance zone. If the pair can break above this resistance zone, we could see a pop higher, maybe a general shift towards the 50 fib level at 157.82 if we can get it past the 157.20 daily price level. But I would look for a pullback here towards trendline support if I was going to actually try to enter a trade at the moment. Trendline support currently comes in around 156. Now, if the pair holds at 156 level and bounces back up, we should have momentum to move higher. And if the pair breaks below, the first test or level that would cost that I would be interested in would be 155.75. So I would expect the pair to probably move a little bit sideways ahead of the minutes and the jobless claims heading into tonight. Let's say, I guess we'll take a look at all the majors. The Aussie USD, as you can see, is almost similar exact path to the Great Britain pound. Moved down, test trend, resigned. Now it's moved up close to the highs of the days. If the pair can break above resistance at 103.25, we could see a general push higher, which ultimately could move to 104.60 over a week or so. If we get a bounce back down here to the trend line, we could find buyers coming in at the trend line support level. If we break that, then we can move back down to 101.80. The USD JPY, as you can see, moved up and tested past support turn resistance at 79.15 before moving down lower. And while the pair's in that range, you'll just have to play the range with 79.15 as a top and 78.60 as a low. Same with the New Zealand USD's range challenge, but it's interesting that it has tested both sides of the range in the last 24 hours, but did close near the top. So I would watch support at 79.30 and resistance up at 80. That was a little bit of a quick review. This is Chris Keane from a Keane point of view, and keep your eyes open for the Great Britain minutes and the jobless claims. Everybody have a good night, and this has been Currency Watch.